Time now for the word on Wall Street. Top investors watching your money. Joining me now, Global Alt Investments Senior Portfolio Manager Thomas Martin. Hello. Barron's Investor Circle newsletter editor Josh Schafer. Also with us, Samir Kapadia. Josh, let me start with you here. Good morning. There's a lot of optimism on the economy, and the stock market's certainly at or near record highs. Can this keep going? We're halfway through the year now and then some.
I think the rally can keep going, Lauren, and the key reason here is earnings. So if you look at not just this past quarter of earnings, we know it's been very great for the second quarter earnings, but you look overall at this point, normally 2026 earnings estimates on average going back to 2000 would actually be down about 7%. Instead, they're up 14%. Same with 2027. 2027 earnings estimates have actually risen throughout the year, up 14%. So you're seeing the chase continue to happen in terms of estimates. I think as long as you have that chase on and you have a market that's relatively fairly valued at about 20 times earnings, you have some room for multiple expansion, a room for, quite frankly, things to get a little bit crazier, a little bit frothier. This has been an earnings-driven rally. We were talking about a bubble at some point. If you want a bubble, things can get a little bit crazier. So I do think you can see a bit more of a rally. And then, of course, you might have a supportive Fed at this point. You had some solid economic data this week that might have taken hikes off the table.
Yeah, we'll get to that in a second. Samir, I want to bring you in for a second. The Wall Street Journal had a piece yesterday that these tariff refund checks are really helping some of the biggest companies in the world. Apple, $2.2 billion. FedEx, I mean, they're bringing in all of this extra money in the form of the refund checks. Your thoughts?
Well, look, this is clearly, a decision that was made by the Supreme Court, which we all have to follow. But I think you got to focus more on the presidential authority. In fact, it was quite underreported, but the president had a huge win yesterday when it came to the way that the Court of International Trade said that, look, these de minimis rules were actually in place for the right reason, and you can get your tariff refunds back. I think this was an amazing win for the president. So there's a lot of things happening on tariffs, but the point is the president's policies are working on that.
Reddit shares this morning are, let's take a look. They're jumping, I think it's double digits percentage-wise right here in the pre-market. The company is set to join the benchmark S&P 500 on Tuesday. Look at that. Up $20 for Reddit. They will be replacing Avalon Bay Communities. Josh, this was a Barron's pick?
It was a Barron's pick a few weeks ago. Always nice to see one of your picks get added to the benchmark index. You usually get a nice bump out of that. The key story with Reddit, of course, now is it's a little bit less of a social media internet company and more of a data company. So they're currently in negotiations for a key deal with Google. They already had a deal. They're trying to re-sign a new deal, perhaps get more money out of Google. They're feeding their data into that Gemini product, but we do think that Reddit is a winner in terms of the AI data space and being able to leverage their data to sell it to these large language models. I think it's probably more of a secular growth story for Reddit that can keep playing out from here.
Let's move to yields. They are certainly up today. Yesterday, there was a major bond auction. Investors clearly want compensation as they finance U.S. debt years out. The 10-year now up 1.6 basis points, 4.6%. What does the Fed do with some of the cooler inflation readings that we've been getting as energy prices continue to bubble up and stay high here? Well, if you look at pricing in of a potential rate hike next month, it's around 32 to 34%. 69% chance that the Fed holds steady when policymakers do meet next month. We got that PPI report yesterday. Prices flat in July from June, and they did ease to a rate of 4.7% in July from a year ago. But then you have the U.S. national debt, Tom. I mean, we're nearing $40 trillion here, and the U.S. is poised to hit the debt limit next year, threatening a default and another likely increase from Congress. What worries you here the most, Tom?
Sure. Well, the debt level is high and is rising and keeps on rising. And I think what we saw with the auction was that came off at 5.22%. Yeah. That's a very high interest rate. And so the interest costs are at a point where they're crowding out other types of investment. So we have to be very concerned about debt. And, the level of debt is hard to service, but also it's a circle that can continue to rise rates. So we've seen that rates are rising, maybe a little bit because of inflation, but more because real rates are rising. And that's a problem for the economy. That's sort of everything else that goes into the rate, which is, hopes and fears and everything that makes uncertainty happen in there. So that debt level was certainly part of it.
Yeah, Samir, that 5.22% that Tom is talking about was a 25-year high. Samir, do you think that the bond market is calling the shots here?
Well, it remains to be seen. All we know is that as long as these companies continue to expand and grow, they're going to be making these bond offerings to the public markets, and I think America's going to want to support them because the president's supporting them. So I'm bullish on it.
Josh?
I think at this point, the bond market doesn't seem like it's fully calling the shots, Lauren, because I would have thought a 10-year close to 4.7 would have impacted the equity market a little bit more. I've been pretty surprised at this point that it hasn't quite weighed on stocks yet.
And you know what else is surprising, Tom? If retail sales come in stronger than expected, despite all these headwinds, the consumer keeps spending money. They're holding up. What are your thoughts for about an hour and 15 minutes from now when we get July retail sales?
Right. The consumer certainly is strong, and they are spending on experiences more than anything else. And the important thing is that they have jobs. And so as long as the employment situation holds up and they can grow their wages in line with or a little bit faster than inflation, they're going to continue to spend. And we've just been surprised ever since COVID at the resilience of the consumer, the economy, and really the world economy in the face of Iran and the Strait of Hormuz. So there's a lot of positive things about it, and the economy just keeps chugging along.
Yeah, you said live entertainment, and I'm going to impress everybody here. So AI probably can't annihilate the live sports market, and that's probably one of the reasons the Lakers got so much money for their franchise, okay? How do you like that? That's the best I can do in sports.
Double my Celtics, Lauren. I couldn't believe it. Celtics only worth $6 billion, and the Lakers are worth $12 billion.
We'll forgive you for liking the Boston teams. You're just like my college roommate. We fight all the time. Thomas Martin, thank you. Josh Schafer, good to see you. Samir, stay there. You're with us all morning. Coming up, Senate Republicans working overtime with President Trump to get on the same page with